What's happening, everybody? All right, so I wasn't going to do a video until after I got back, for next Monday through next week, but we're going to do a quick schools in session video tonight for probably about 30 minutes, maybe less, and we'll be talking about truck purchase this time. Instead of leasing a truck, and at the end, we'll give a little bit of tax differences between the two, right? That's what we'll do. YouTube's probably not going to send out notifications because I haven't got anything, right? I haven't got nothing. But we will check the screen. We'll make sure that it's all coming out good, right? On the YouTubes. And we'll get started here in just a second. Of course, there's nobody commenting, so I see there's people in here, but it must not be the normal people. Here comes Empty Fuel Corp. Adam, what's going on? There's Mr. Empty Fuel Corp. Thanks for joining us, right? Other trucker James Best. Oh, am I under that? Here, well, let me finish this and we'll start off. I shouldn't be under that. Should I restart it? Let me see here. No, it says it's under my channel. It's under my channel, James. I'm pretty sure it's under my channel. Yeah, it's got the videos right there, brother. So, anyway, we will start. All right. I know it's under both. I'm streaming it everywhere, right? I did not stream it, right? It's under all the channels. All right, so we got the multi-stream going. That's what it is. So James got me messed up here. So we'll just not. James, just eat your Moe's, right? He's eating at Moe's, everybody. Okay, so truck purchase. Let's get to it. We ain't got time to mess around with James. Truck purchase, right? Truck purchase. Here we go, right? So right up there, you're going to see that we're going to talk about from a bank or commercial credit. And then we'll get into some other things too, right? About the truck purchase. So right off the bat, we're going to say truck cost, okay? You're going to have a monthly payment instead of a weekly payment compared to a lease, right? You're going to have a monthly payment because most people do company leases are paying by the week unless you do through a dealership, then it's going to be a monthly. But if you're buying a truck, purchasing it, you're going to have a monthly payment. Now, you can either purchase new or used, right? And that depends on some things also. And then if you buy new, make sure you get the extended warranties on all new equipment, right? Get the 6-year, 600,000 mile. That's what some of them offer. If you can get that, add it in. It's worth the money. It might cost you an extra $8,000, $10,000, $12,000, depending on the brand of the truck and what the warranties are and what motor you have in there. But even if it was $12,000 extra dollars over 6 years, you just do one box, boom. You don't spend the money. It's paid for itself. 2 turbos, bam, got your money. Injectors plus turbo, bam, got your money back. You see how fast you can recoup your money with that, right? So right up there, make sure that you get the extended warranties. Now, on used equipment, that depends. Like when I got the International out back, they gave me a 2-year, 200,000 mile engine plus DEF system. Totally covered anything in that realm of that equipment that dealt with the engine or the DEF system, they covered. All right, so make sure you get a warranty, right? And if you don't get a warranty, some of these used trucks, if they don't give you a warranty, they want to say these aftermarket warranties. Watch those closely. Read the fine print, folks. I know you don't want to read it, but read it, because if you don't read it, the warranty's only as good as the paper it's printed on. You know what I'm saying? It could go up your backside, up the crease. You know what I'm saying? That's as good as it is. but some of them are, pretty good. And then also know what your deductible is if you buy one of those extended warranties that's not from the factory, right? Right? Now, the difference between the lease and the truck, if you're buying it from a dealer, actual purchase, is you own it at the end. You don't have a buyout, right? You own it at the end, right? Now, here's another major factor. If you purchase a truck through a bank, commercial lending place, truck financing, your credit will be established because they'll be reporting monthly, right? That's different from a lease, right? If you lease it from a company, they're not reporting. So you're not getting no credit to buying that truck. So if you're a first-time buyer and you're doing a lease purchase, you go to buy a new truck because you think, okay, I paid on this for 3 years, they don't recognize that. Some of them might go through the work and headache of you showing them everything if you have purchased, if you paid in, they might give you a little credit. More than likely, they will not, right? The good to this when you buy a truck is your credit is affected, right? You're going to get a credit history. The bad part is you're going to have a high debt ratio if it's on your personal credit, right? And people say, well, what's that? Well, think about it. If you finance a $100,000 truck or $150,000 truck, and you have a $2,500 or $3,000 monthly payment, and it's underneath your personal credit, right? Your Social Security number, because a lot of them will try to give you the commercial credit first time out, but they're going to want you to back it so it goes in your personal credit history. You're not going to get nothing because your debt ratio is going to be high. It's going to be super high, right? Super high. So if you buy a used truck, you can get away with that because that comes down to, you buy a $40,000 or $50,000 used truck, you can't hardly get pickups for that nowadays, right? I mean, if you go get a Dodge Ram 3500 with a big old 1,000 horsepower, the huge, big old Cummins motor in it and everything, it's $80,000. $80,000. You can go pick up a 2017 Freightliner all day long in the 60s right now. In the 60s. Only 2 years old. Cheaper than you can go out and buy a dually. Wrap your head around that, folks. Cheaper than you can go buy a dually. Unbelievable. Take that little Cummins motor that's in a dually and put it up against the 2017 Freightliner or the 2017 International or the KW with the big old Cummins in it. Right? The 500 or the 550 Cummins up in that thing. Put those motors together and you just paid $20,000 less for it. The truck can haul more, it can do more, it can make you money, right? Of course, they're going to say, oh, you can do the dually with the hot shot thing, right? Oh, yeah, you can. You can. All right. You like the new format? Cool, Lance. Glad. I like that comment. This is the new whiteboard for now. All right? We're doing PowerPoint presentation. That way you can read it. There is no reason why you cannot read this. Right? Now, let's go to number 4. This is the financing part we were talking about, right? The dealer financing, right up here. You can get Packard, Volvo, Daimler, right? Those guys. Daimler is Freightliner. Last time I know, and they're the ones that were the ones that were financing Freightliners, right? They report to the credit bureaus. And if you purchase a brand new truck, instead of leasing a brand new truck, they cost a lot less than company leases, right? Because we all know that a lot of company leases will charge you $1,000 a week, $1,200 a week, right? Most of them are on $1,000 a week with nothing else. That's $43.30 a month. Wait a minute, James is on here. OTJB. See, James, I have it down to the dollar, baby, because there's 4.33 weeks in every month, right? Because you break it down. That's the breakdown times, your $1,000 a week. That's $4,330 a month. You can buy a brand new truck, brand new, and if you can get really good financing, you can get them as low as $2,400 a month. Some around $3,000, but even at $3,000, that's still $1,330 cheaper per month. Per month. It's a lot of money, folks. Just the savings. If you can purchase it instead of lease it from a company, just the savings alone every single year of roughly 15 grand could be in your maintenance fund. In 3 years, you'd have $45,000. Wrap your head around it. I know it's hard for the math, but compared to one of those company leases, that's $1,000 a week. If you purchase that same truck, even if you got high interest and it was $3,000 a month, you're saving $1,330 saving $1,330 a month. Every single month. Same truck, same bat channel, baby, right? So at the end of the year, you're going to be roughly 15,000 of change, right? 16 grand. In a 3-year company lease, at the end of that 3 years, the guy that's buying his truck would have 48. If he paid the same amount of money and stuck that extra 1330 in the bank at the end of 3 years, right? He's going to have $48,000 sitting in the bank, sitting there. Yep, that's right. What's that mean? Solid business. It's going to be a solid business, right? All right, so we're going to cash. Now, if you're lucky, you got lots of cash sitting around, you want to pay cash for the truck because you don't care about establishing commercial credit or anything like that, or you're going to do it later down the road. There's a good thing about it. The good thing is, right up there, you have no payments. You have no payments. Therefore, you just stock all that money away in an account, right? Stock it all away. Then, the bad, though, is you don't establish commercial credit in case you ever needed it. You don't establish it. Why? Because you're paying cash, right? You're paying cash for that money, for that truck, right? So you'd have no payments. I know a gentleman's coming over to Light Trucking this month, and he's paying cash. He'll have no payments, and he says, I'll just make it up because I'll just act like have a truck payment, and I'll just stick every month a truck payment in the bank, and guess what? He'll have it back in no time. Have it back in no time. So if you do have the cash, you can do that, right? Now we're going to go down, and so we're doing this. This is going to be a fast schools in session because, we're going snowmobiling tomorrow. So all the light trucking guys on here, right? Southbound Jay's on here. I seen him. I seen OTJB and all that. If you book a load from a broker and he says, we need updated insurance, call the insurance company. Tell them you need a certificate sent to, if you can't get a hold of me, call the insurance company. It's on your pamphlet there, right? It's on your insurance certificate. Call them. Say, hey, I need a certificate sent. There'll be an option on the phone. And a nice lady will answer the phone. Tell me you need a certificate sent and give them the broker's name and their email address, and they'll have it done just like that. All right? So if you can't get a hold of me, call them so you're not held up. Now, school's in session, right? Buying a truck. Thanks for watching. But here we go. We're going to get into a little extra. This is extra here, right? We're going to get into some extra. All right. So let's zoom this back out so I'm not in the way, man. All right. Here's your write-offs for taxes, right? This is going to be the big difference between buying and leasing a truck, right? And if you want to read the tax code, if you want to regurgitate the long, boring tax code, you can do it, right? All you got to do is go to irs.gov, type in the publication you need, and read it. You want to read how long to depreciate a truck? It's there, right? And here it goes. When you're buying a truck, this is your write-offs. You get to write off a 3-year depreciation, right? So if you bought it for $150,000, it's depreciated over 3 years. Kind of. It really goes into the fourth year, right? You get a good first year chunk. The second year, you get a huge part of it. The third year, it falls back down, right? And then you get a small leftover on the fourth year. All right? You get interest on the loan. So if you have a medium interest rate and you pay $12,000 a year for interest, you're going to get the depreciation. Let's say you bought a $150,000 truck. Let's say your first year depreciation was $40,000, right? Let's say it was 40 grand, and you had 12,000 interest. That's 52,000 you're writing off, right? That's how that would work. So if you really want to know what the 3-year depreciation is, go into the depreciation schedule, put in the amount you bought the truck for, do the calculation, and it'll tell you, right? It'll tell you what it is. Actually, I could. Let me see. Let me see if I can do this. Let me go in here. Let's see where this. I'm going to open up a H&R Block tax cut program real quick, and we will get to getting it, right? Let me hit start a return, and let me go to federal. I guess I could show this, right? I guess I could show this here. Let me go to federal. Let me squeeze this box over here. Squeeze this box over here so I can see what we're doing. Let me move these around. Bear with me for a minute. We're gonna do this. Forms, show all forms. All right, and then let me go down here real quick to a depreciation schedule. Depreciation worksheet. All right, so let's see if we can do this. Form Central. Bam, here we go. All right, folks, here we go. So let's say you fill this form out, right? And you don't put truck. The legal term for IRS, it's a tractor. All right. Where are you going to carry it over to? And you'll say Schedule C. Which copy of the tax form? It's 1. Date placed in service. Okay, this is a 2018 program, folks. So we're going to say it. We bought the truck in February 2nd of 2017. Okay? That's what we're going to say. And then we're going to come down here. Type of asset. Other property not listed. Depreciation code of a 1. And we'll see if that gives us the 3-year down here. Scroll all the way down. See? 1, 2, 3 years with a 4th. So your depreciation code is a 1. And scroll back up. Total original basis cost. So if you bought a $150,000 truck and you took no Section 179, which means you could take extra depreciation, right? You could take it for $100,000 or $50,000 to lower your burden, but we're not going to take nothing, right? And we're going to come down here, and let's see here. We got a 3-year. So we come down here, and it tells us our first year is $50,000. Our second year will be $66,667. $22,220 something there, and then $11,000 on that 4th year. That would be your depreciation. So if you bought that truck, right? If you bought the truck, your depreciation would be $50,000 that first year at $150,000. $50,000, and then if you paid, let's say, $12,000 interest, that's $62,000. And if your payment was $3,000, you'd pay $36,000 out, but you get a $62,000 deduction. So that's $26,000 you have to make to break even right before you start paying taxes, right off the bat. If you bought that January 1st, right, January 1st, basically your first $62,000 you make, there's no taxes paid on that because that's all the write-off. Because you make $62,000 gross, you got $62,000 deductions, that's zero, folks, right? So your first quarter, even if you did $15,000 gross every single month, that's $45,000. You're still $21,000 whole. And if you have anybody say you got to pay $5 or $6 grand in tax for your quarterly payment, are they nuts? Are they crazy? Why would you give $6 grand and take away from breakdown money when you're still in the hole? Because you know your yearly expense at the end, you got a $62,000 deduction there, right? And then it'll include all the fuel you just bought that first quarter. So if you did 45 grand and you still have, what, $17,000 left, but you bought $12,000 in fuel, you're still almost 30 grand in the hole. So you go another 2 months, 3 months. Guess what? You're still in the hole or you're just coming out. So that next quarter you ain't got to pay either. And see, if you use this program, right? If you use one of these programs, even if it's last year's program, because that's what I would do. I would use last year's program, right? Last year's program, you could follow and put your numbers in, right? Because all you'd do is you'd backdate this the year before, so that way, see, this is the second year, right? So if we screwed up this form, because this should have been 2018 taxes, right? So if we were in 2018 and we bought that truck, that should have been 2018. But this will show what I'm talking about. If you put that at 2018, right, and you scroll down real quick, right, you got 50 grand. So if you want to know what you got for next year, right, you come in there, right. So this is going to be 2019's program, but we're using 2018 to keep track of our numbers. So all we got to do is slide it to 17 because now it's the second year we're into it, right? And that we see our depreciation is $66,000 right there. Right there. And then we can go through in every quarter. We could put our numbers in. We could put our numbers in here every single quarter. And guess what? You'll know if you have to pay in or not. You will know when you come out of the black, you come out of the red into the black. You will know this. You'll know it. Therefore, you'll be ready for it. You'll be ready for it, and the tax man will never get you. Because you won't go all year and go, oh, man, I don't know how much I owe. What do I owe? See, it's being smart in business. You should be able to do it all yourself. You should be able to, if you're going to own a truck and be a trucking company, right? Either an independent contractor leased onto a company or running your own business, you should also know the tax part of it, right? You should. Because how do you know that accountant? See, a lot of people say, well, that's not my thing because, I'll have an accountant do that because they're specialized in it. There's a lot of accounting places that do the taxes wrong, folks, right? So, you all can read. These programs is all they're doing. They're plugging into these programs. You can do that too. And then you can go through and read the IRS code and find out what the deal is if you're not sure. Right? Anyway, it's better to know the whole business if you can. You'll be a lot more profitable, a lot more knowledgeable, right? I know it's boring stuff. Who wants to read this stuff, All right, man. That's it. Thanks for watching, right? School's in session. I'm buying a truck. We'll answer some questions real quick and see what happens. We'll see what everybody's doing. So, if you got some questions, go ahead and throw them there on the screen, and we will get to them, right? Yes, Big Rex says, can you depreciate a used truck? We'll set it over here. Just like you can new trucks. Yes, you can. You can do that. It's a 3-year depreciation, right? The only difference is You come into this form. That's why you buy one of these programs. 30, 40 bucks. You buy them every time and stick them in your computer. And then you can run last year's program for the next year, because all you're doing is getting an idea, right? An average. It's not going to be an exact number, but guess what? You're not going to know a whole lot either, and you're going to know exactly where you stand instead of not knowing where you stand in business, right? This will help you. James, OTJB, he got the H&R Block last year. I helped him with it. He did his taxes. Now he does his own, right? He knows where he stands, because at that last tax program, he can go in there and he'll see. He'll go to this depreciation schedule. He'll say take his old return. This is what you do. Take your old return, save it as a different name. Then you can change the numbers. You can go in there and it's real easy. Just take out the fuel line, put in the fuel you have that first quarter. Same thing in the maintenance and everything. And then your depreciation sheet, you open it up, back it up a year, so now you got the right depreciation for the year you're on, and boom, guess what? You know exactly what you're going to have to pay or what you don't have to pay, right? So we go back here to this, and so if this was a used truck, right? You go here, and let's say you paid $65,000 for it, and you slide on down here, and your depreciation would be $21,667, $28,888, $96,30, and $48,14, right? Now, here's the thing: if you paid cash for the truck, and you ran like crazy, right? You ran like crazy. Here's the benefit. Here is your benefit if you paid cash. Italian Stallion, I know you're watching, brother. So watch this, right? So here's your difference, right? You come in here, and let's say you paid $65,000 for a truck, and you come down here and you say, "Oh, my depreciation is 21, but I made a whole lot of money, and next year I know I'm going to start saving for the tax burden. So you know what? I'm going to take Section 179 because I need another $40,000 to where I won't owe any money." So you could take the whole $65,000, right? You could. That's going to zero you out. That's going to come down here, and you got 0, 0, 0, and you took the whole $65,000. So that comes right off the profit line, right? Or you can say, well, you know what? I only need $20,000, so I'm going to take an additional 20, and you do that just like that in this box, and then you come down here, and you see there's $45,000 left. So then it's gonna depreciate on the $45,000. You've got 15, 20, 6, and 333. So if you add that up, that's 35, and that's 10. That's 45,000. So that's what you get. All right. So back to there. All right. So that's what you get, folks, right? That's the video for tonight. Hope everybody enjoyed it, right? We hope you all enjoyed it. Rich Rapid gives the thumbs up. Big Rich. All right. Let's see. Mr. Patana, to lease from a dealer. Yes, you can lease from a dealer. I've leased from a dealer. I've purchased trucks from a dealer. I've leased from a dealer. I purchased trucks and got the money from credit unions and everything through my going on 29 years, of trucking, right? Yes, you can lease from a dealer. I just turned one in back in end of December. How is required for a down payment? How much do you recommend for having a savings for a new owner-operator? Well, that depends, right? It depends on different things. If you buy a new truck, or you buy a truck with a warranty, it's nice to have $15,000 or $20,000 or so dollars left over in the bank for a maintenance fund. But if you buy let's say you buy a new truck, it's going to be bumper to bumper for that 100,000 miles pretty much. You're going to have 600,000 mile warranties in most cases, 6 years. So, you're going to go at least 2 or 3 years before you have other things going wrong with the truck that you're going to have to fix. But for that first year, you can sock away a lot of money, right? Because you're going to not have much maintenance. That could build up your fund. So there's different things. But if you buy if you buy an old truck, let's say 20 grand, pay cash for it, you better have 20 or 30 grand, either in the bank, or you better have half of that in a good line of credit, or you better have a whole big line of credit to fix that thing if it blows up, right? So it all depends on your situation and what truck you're buying and so forth. It's kind of hard to answer the questions. It's a general, answer without digging in to see how much other things that you would owe, household stuff and everything, right? Because you don't want to shorten yourself up. You want to make sure you got that money, or big lines of credit and no credit cards, with stuff on them, right? What's up, Daniel? Thanks for joining. What else we got here? Yearly average of net income for an owner operator. That depends, DL. That could range from, 40,000 on up to 150, 200,000. It just depends on how much somebody runs or what they're hauling, what type of equipment they're doing. You can't answer that question because not everybody runs the same. It's not a question you can answer. Well, Marty, you can do a hot shot. Hot shot's good. I mean, hot shot Dave. If you want a good thing on hot shot, get a hold of hot shot Dave. He can help you out. He's got all kinds of tools there to help you out. I'm leasing with SFI. What's my deductions? You get to deduct all the lease payments on that truck, all your maintenance and everything that you're paying on that truck. So that's your deductions, right? Everything, every single payment you pay. So Schneider makes it easy for you, right? They make it easy because when you get your statement, it's all down there, all the deductions. So at the end of the year, ask them for a yearly printout, and they'll send it to you, and it's going to have all your revenue and all your deductions. Fuel, so you just put that on the fuel line. They're going to have your SFI payments. You just put that on your lease payment line on the Schedule C, and so forth, right? So it's real easy to do your taxes with them. And here, let me open up a Schedule C since we got this open. All right, so let me go back here. Let me go here. All right, so here's a Schedule C. So here's what you want to do. If you're using a tax program, a trucking software program, then what you want to do is come down here. And you see these boxes right here, 8 through 27. So you got vehicle, rent, lease stuff here, vehicle, repair, maintenance, so you name it that. So all your repair, maintenance line, you just stick it right here in 21, right there. Supplies, you stick it right there in these supplies. Taxes, licenses, stick it there. Utilities, put phone bills, internet, stuff like that right there. Any commissions or fees you pay, contract labor, if you have to pay for any lumpers and things like that, just stick it right there. Here's your interest, here's your insurance, you put there, interest you can put there, and so forth, right? You come up here, and this will be your meal expenses, and since you are DOT regulated, it goes right here on the 80% line, right? And so forth. So you come up here and you got other things here that you can put in here. Your lease cost goes right here. So if you're leasing a truck, a car or something, you can put right here other rental costs. You can do a vehicle worksheet, right? Which that would fill in yourself. So what they're saying there is if you close this form out and then you'd be clicking on forms, and here, let me get back out of here. I want to make sure nothing gets shown. So here, let me click that out. Okay, so here we are. If you click on forms, and you come down here to let me go to the vehicle worksheet. Right here, vehicle worksheet, and you click on it, right? You click on it, and what it's going to do is it's going to open up this form called vehicle worksheet. Now, you'd put tractor here in this line here, and you set Schedule C here. But you can come down, and then you can stick in here your insurance if you want, if you pay rental for parking, the interest you paid on it, your fuel, your registration if you pay anything on it, repairs, oil, all this stuff, right? Business portion, lease costs, so you can put your lease stuff in here, you know, your rental lease right here and here. You got your, if you have an inclusion amount, but you don't need to put that, you just put that in there. And you scroll down, and it'll add it all up, and it'll give you your deduction, and then that'll take it and it'll put it over on their Schedule C on that other line. So there's several ways you can enter it in here. If you use this vehicle worksheet form, it's really simple, right? Because it gives you all these blocks right here that you can just pre-fill in. But to make sure, you got to make sure this says 100% deductible business. So what it means is, if you put in number of months you used, let's say you used it for 12 business miles. Let's say you did 120,000 miles, right? Now, community miles is 0. It's your truck, and you put 120,000 here for total miles, right? That gives you 100%. So if your insurance was $6,000, so you get 100% of that. $6,000 is the deductible amount. You want to make sure that's 100% there. You want to make sure you fill these out correct. If you don't, and that's not 100%, you're not going to get 100%, right? So that's what you want to make sure. So you got to learn how to use the forms a little bit, but you know where the numbers are. All right. So there you go. We're out of here. We got to get some stuff done. Thanks for watching. We'll be back. Let's see, the 20th will be the Monday night. We're going to do a schools in session. We'll do it that night. I might move it to Sunday nights, right? Because I do that thing in the morning anyway. So I might do a schools in session on Sunday nights and then just do my Monday through Friday spot market money, right? So we'll do that, something like that, because it's a better thing if I just do it Sunday night. So I'm not doing 2 videos in a day, that type of thing, right? But that'll help everybody out, right? If you're going to buy a truck, whether you're going to pay cash for it, you know, new ones, used ones, gives you an idea what to look out for. Gives you, you know, an idea what your taxes do, what you can do. You know, there you go. Thanks for watching, everybody, and we'll have the call-in line open next Sunday night, right? So, you know, we'll see y'all later.